stock which is reacting to news, of course, is Ranbaxy, and this is despite two very important clarifications that have come on that weekend news that the US FDA is probing some malpractices as far as Ranbaxy is concerned on critical APIs, drugs that were marketed out there. In fact, Ranbaxy has said that yes, that the US FDA has asked for clarifications, but no legal proceedings have actually been initiated. And what's more, Daiichi Sankyo, the Japanese company that took over the promoter's stake in Ranbaxy, has clarified that this does not mean that they're going to rethink on any of the merger plans as far as Ranbaxy is concerned. A lot of this was already taken into consideration when they were talking. Two important clarifications, but that's done absolutely nothing to shore up the stock. The stock down about 54 rupees. And what is amazing is that it's one of the few pharmaceutical stocks which are down, and it is one of the few performers of the year. In fact, if you look at year to date, Ranbaxy is the stock that has given you maximum returns.
See, what happens in pharma sector, I think the valuation has two components to it. One is the current stream of earnings. The other is on any new products and new discovery filing or some milestone payments expected in the future. So you are pricing an unknown plus an expectation. And then when something negative happens, if you don't meet that, then it gets tanked beyond, means the same way it rose. Because in terms of multiples, I'm sure the sector is not a very cheap sector. So there's a lot of expectations priced in. And when there's a disappointment, and now it is totally in unknown territory. See, nobody knows for sure what's the impact. But the thing is, if I'm uncertain about something, I would rather get rid of it. And if I'm holding it now since, let's say, the last 1 year, I've made enough money on it, so why risk that? I think that is what I can understand, though I think post facto we try to fit in logic to that, but we don't know the real reason.
I know, but absolutely that's possibly why the markets are using this opportunity to, as you said very importantly, sell out and take profits home, because there's very little in the market that has actually given profits this year.
And there are losses that are creeping up. Mr. Balakrishnan, your thoughts on this entire HCL Technologies mark-to-market loss and nearly $500 million plus of hedge positions unwound? Can this become a systemic problem in earnings going ahead? We haven't seen any signs of it from Infosys and Axis Bank.
I don't know the full details, what kind of losses they are, whether it's because of speculation or because, see, the other thing is you start booking your revenues on the basis of some notional exchange rate, and when it actually comes in, it's at a different rate. Now, if it's going to be a market-related risk, I am not so concerned about any company.
It would average out.
But it would average out. But if you are speculating on currency, then I think you get your confidence shaken, because you're paying the company to, let's say, for technology or pharma. You're not paying it to speculate on the foreign exchange market.
Sure.
It's like in the old days, all the companies would put their money into leasing or put it into stock markets. I would put it that way.
Right. Hold that thought, Mr. Balakrishnan. The other issue, of course, is those IIP numbers and the impact that they're having on our market. So we'll get Mr. Balakrishnan's thoughts on it. But as we head into the break, lay the foundation for it. These are thoughts from A.K. Purwar, Chairman of India Ventures, and Peter Morgan of HSBC on what they're making of the overall macro situation in India right now. We'll get a little more specific with respect to sectors and economy when we return.
You're watching the countdown, and it is looking rather flat for the Nifty, at least as we head towards close. We still have about 45 minutes, of course, to close, but a couple of stocks stand out in their weakness or their strength in today's trade. We spoke about Infosys. That stock down 111 rupees at 1565 right now. But on the other side, we are seeing pretty good buying into a couple of stocks like ONGC up 35.5 rupees, Reliance up 32 rupees, SBI up 37 rupees. A lot of the metal stocks doing fairly well. You have Sterlite, which has been very, very strong over the last couple of sessions, up 18 odd rupees. Tata Steel is up 18.5 rupees. So it's really a stock pickers market. I don't know how many people are actually taking a directional call here. But let's get Mr. R. Balakrishnan, Executive Director at Centrum, back into this conversation. Bala, a couple of interesting developments have happened around the oil companies, and I know that ever since the bailout package was offered to them, it's actually fallen off the radar. But actually, if you see, Friday, BPCL was one of the biggest losers in the market. Today, you have news reports that the government might be stopping a lot of the oil marketing companies from actually expanding their retail outlets over the next 2 years. There is a squeeze out there. You have had IOC's chairman going on record in the press today saying that, for the first time in many years, the largest Indian company in terms of market cap is actually going to face losses. There is a huge worry out there. Are the markets factoring in all of that?
I think so. I think the markets have actually, I mean at the macro level, no. As far as the oil marketing companies are concerned, yes, they have virtually ignored them, saying that the biggest shareholder is actually not taking care of the minority shareholders, because it's been acting as a whipping boy for the government. But if you look at, as we were discussing the entire oil scenario, the incremental oil bill is close to $70 billion, let's say, which is 6 to 7% of your GDP, of our GDP. So if you pass it through, the macro is safe. You pass it through at the retail level, somewhere else demand will get locked off.
Right.
If you don't pass it through, your macro is going for a toss. So it's a huge thing. I think people are, they have all accepted as analysts or everything that yes, this year there is a slowdown. Estimates for GDP range from 6.5, 7, 7.5 to 8, which is the party line. Now, what happens a year later is what I think I am more worried about, because all this carries over. The next year is going to be extremely difficult. It is not that suddenly in February the new budget will come, all our worries will go away. For that, several things have to happen. The oil price has to stabilize or come off. The world as we know it outside India, it has to find more peace with itself in terms of inflation coming off. So I think the next year is also something we have to start looking at right now, which I think people are not paying enough attention to.
How deeply would you read into